So you were set on buying a house, but now interest rates have risen and you don't think you can afford the house that you want anymore. Well, I have some news for you. I'm Kyle Winn, and if you haven't seen any of my other videos, I help people just like you buy and sell homes here in Southern California. Now you're going to want to sit tight and check out this whole video because I'm going to give you a few ways that you can beat these increasing interest rates so you can get into the home of your dreams. So let's get to it. Well, thank you for stopping by to check out this video. So to get into today's topic, you thought you were ready to buy a house, but now you don't think you can afford it with these rising interest rates. Well, today I'm going to give you a few ways to work around these higher interest rates. But before we get into that, be sure to subscribe to this channel so you can see all my future tips and other fun content. So maybe some of you are wondering why interest rates are now into the mid to high sixes when 1 year ago buyers were getting interest rates right around 3%, right? Well, a lot of it revolves around mortgage-backed securities, which are basically giant bundles of mortgages that banks sell off to investors so that the banks can have the funds to keep writing new mortgages. Now, when COVID-19 hit in early 2020, people were predicting that our economy was going to take a huge hit from the shutdowns, right? You all remember this. So in order to support the economy and encourage consumers to keep spending money, the Federal Reserve ramped up their purchases of mortgage-backed securities. And since the Federal Reserve accepts relatively small returns on these investments, this in turn reduces the mortgage interest rates offered to buyers like you. Now, throughout 2020 and 2021, the Federal Reserve was purchasing tens of billions of dollars of mortgage-backed securities each and every month. And trust me when I say that this is a lot. All right, and this drove interest rates down to right around that 3% mark that we all saw a year or two ago. Then at the beginning of 2022, the Federal Reserve came out and said that they're actually going to stop buying these mortgage-backed securities, and that caused interest rates to climb steadily from about 3% to around 6% earlier this year. Well, now why is that? Well, if the Federal Reserve isn't buying the mortgage-backed securities, then who is? Well, that would be our Wall Street investors. And the interest rate of 3% that so many people got last year is just too much risk and too little return in the eyes of those investors. So if the banks want to be able to sell off these bundles of mortgages so that they can keep writing new mortgages, they have to increase your interest rates so that the investors would be happy with their return on their investment. Now here we are heading into the last part of 2022 and interest rates are well over 6% and even creeping up on 7% for a 30-year fixed rate conventional loan. Now I'm not saying this reflects on the minimum return that these investors need or anything like that, because there's a lot more that goes into their risk tolerance, like the nation's economic outlook, bond markets, job market, and a whole lot more. Okay, enough of all that, but hopefully that gives you a little understanding of why mortgage interest rates have fluctuated so much over the last few years, and hopefully that made some sense. Now, to help you keep an eye on those mortgage-backed securities and up-to-the-minute mortgage interest rates, I'll include a link in the description below. So go ahead and add that link to your favorites or bookmarks or whatever, and if you find it useful, please give this video a thumbs up for me. Alright, now I know you're thinking, cool, that's all great information, but how do I beat these interest rates of over 6% or almost 7%? Now my first tip here is to talk to your lender. Now I know this sounds really silly or maybe way too simple, but it couldn't be more true. Now remember that I said that mortgage interest rates are in the high sixes and almost 7% for a 30-year fixed rate conventional mortgage, but that may not be the best loan for you. Now your lender can help you shop for different loan programs based on your individual financial situation, your occupation, current or prior military service, the area you're looking to buy a home in, and most importantly, your own goals for your home and your finances. So before you think your home buying goals have been smashed by these interest rates, please do yourself a favor and just talk to your lender. Another way to beat these interest rates is to look at a new build. Yes, I'm talking about a brand new home being built right now where you get to pick out your floors and your counters and all that fun stuff. Now these builders have in-house lenders that are currently offering many incentives. For starters, these new build in-house lenders purchase bundles of mortgages at predetermined interest rates that they then sell off to consumers for their new homes. Well, if they're still selling mortgages out of a bundle that they purchased a few months ago, that could save you on your interest rate since interest rates have only gone up recently. Now, another reason to look at a new build specifically is that many of their in-house lenders are offering introductory rates on their mortgages. So for example, in year one, the interest rate might be 5%, and then year two, it might be 5.5%, and then year three might be 6%. Now, it sounds funny, but this can be a great option that will save you thousands of dollars over those first couple of years. But you do need to realize that you need to be comfortable with that year three payment no matter what. All right, now my favorite reason to consider a new build is that many of the builders may also offer you a credit that you can apply toward buying down your interest rate. Now, did you know you could even do that? You can pay your lender an upfront fee and they will reduce the interest rate on your mortgage for the entire life of the loan. And the best part of buying a new build right now is that many of these builders will pay that fee to buy down the interest rate for you. So if you don't want to deal with introductory rates and having a new mortgage payment in year two and year three, this could be the perfect solution for you to lower your interest rate from the start and just lock it in. Now, if you don't want a new build for some reason, or if they're just not available where you're looking to live, there are ways to reduce your interest rate on the purchase of an existing home. Now, the first thing I want to mention is a loan program called the 2-1 buy down. Mention this to your lender so they can walk you through it and see if it aligns with your financial goals. But basically, the way this works is that you'll write an offer on a house and you'll ask for a seller credit. And this seller credit will be held in an escrow account and be applied towards buying down your interest rate for the first 2 years of your mortgage. Now, for example, let's say you get a $10,000 seller credit and $7,000 of that goes towards buying down your year one interest rate to say 4.5%. Then the remaining $3,000 would be used in year two to buy your rate down to say 5.5%. Then year three, your interest rate would be at today's going rate of, let's just say 6.5% as an example. Now, you will be qualified on the higher rate with the higher monthly payment, but this loan can be a great tool. Now, first, it will save you thousands of dollars over the first 2 years of the loan. And second, where are interest rates going to be in 2 or 3 years? Nobody knows, but if interest rates go up to 8 or 9 or 10%, then that 6.5% interest rate you'll have will look pretty dang good, right? Or if interest rates go back down to 5% or 4% or even 3%, well, then you saved significantly on year one and year two, and you may be able to refinance into a lower interest rate. Either way, I think this loan product can help a lot of people. However, just like with the new builds, if you don't want to deal with your interest rate changing and your monthly payment changing, when you write an offer on a home, you can still ask the seller for a credit that you apply towards buying down the rate for the life of the loan. So for example, instead of 6.5 or almost 7% today, maybe you're able to buy it down to 5.99% and call it a day and say, I'm good. Now, there are so many ways to save on your mortgage interest rate and as a result, your monthly payment, but these are just a few of my favorites at the moment. But if you don't take anything from this video, just do me a favor. If you've had even the slightest thought about buying a home, but you're discouraged for some reason, probably interest rates, thinking you can't qualify for it or afford it, just please talk to your lender. That conversation will be free and your goals of buying your next home may be closer than you think. Well, thank you so much for watching. I really hope you learned something here with me today. Again, I'm Kyle Winn. Be sure to leave me a comment below if you have any questions. And before you leave, be sure to like this video and subscribe to my channel so you can see all my future content. I will see you in the next video.